Good morning, everyone, and welcome to the second in our series of webinars. Last year, this time, you will all recall, is exactly when we went into this pandemic, when the passengers who came back from Italy tested positive and our country went into this pandemic. Obviously, the impact of the pandemic has been quite severe on our economy, and we're still having to engage in these virtual webinars, whereas we would have preferred to have you in person. Today, I'd like to introduce our presenter. His name is David Mettelkamp. David is a senior economist at Industry Insight. He has a master's degree in economics, specializing in macroeconomics and monetary policy. David joined Industry Insight on Valentine's Day in 2015. As a senior economist responsible for the compilation of several industry reports, including the Construction Industry Forecast Report, the Monthly Construction Monitor for construction executives, as well as the Investment Map, which is a provincially focused review. David is involved in the development of customized tools to improve data visualization and strategic analysis for the construction industry. David and I have a few things in common. David loves to cook. He enjoys wine. So David, welcome. We look forward to a very insightful presentation. Today's presentation focuses primarily on the construction industry. Last week, we had Dr. Azar Jamin giving us a broad sense of the economy after we've had the budget speech. So David, welcome, and over to you.
Great, thanks, Richard. Good morning, everyone. It's absolutely fantastic to be with you today, although maybe virtually. Hopefully this time next year, surely, we'll be able to do this in person. And yeah, we're going to talk a bit about the economy. We're going to talk mostly about the construction industry. Obviously, very, very dire economic times we find ourselves in. We are in one of the biggest economic collapses since the late 1920s. So almost 100 years, the biggest slowdown that we've seen. And the construction industry is very much a part of that, and is going to be, in theory, very much a part of the rebuilding of our economy if we can get some of these structural reforms through going forward. So what I'm going to talk about today, we're going to have a brief overview of the economy. Of course, we have to talk about it. It is one of the most important drivers of the construction industry, especially the building industry, which is more privately driven. We're going to touch on a few key things in the budget that I thought were noteworthy to talk about. Some of the main things that have been done there. Of course, we're going to talk about infrastructure spending. Very, very disappointing that infrastructure spending has actually been cut in real terms, according to the budget. After all the rhetoric, after all of the promises about rolling out big infrastructure projects, etc., the government still went ahead and cut infrastructure spending. So that was very disappointing. We'll chat about that, a bit of the ramifications, break that down a bit. But we're mostly going to be talking about the construction industry. Firstly, just historical context, where we find ourselves today relative to the past. We are in, even before the pandemic, the construction industry was not one of the worst performing sectors. It was the worst performing sector in the economy over the last 3 to 4 years or so, with a big slowdown in infrastructure spending, hurting the civil industry, as well as the overall impact of the economy on the building industry, also very, very negative. So we're going to chat about where we are, and it is in record low territory, more or less, within the broader construction industry. But there are some positives to take forward, so we're going to chat about that. There's been a boom in DIY and home improvement, for example. Although governments cut infrastructure spending, there has been better data out of the civil construction sector, has proved to be somewhat resilient. We'll chat a bit about that, and then I'm going to go specifically into the civil construction outlook and the building outlook, because there are very different dynamics between the different industries. Okay, so just to set the scene a bit, you can see that if you look at our GDP growth over the last, since 1994, you can see that over the last 5 years or so, there's really not a whole lot has happened within the South African economy. The population has failed to grow the economy, beg your pardon, has failed to grow at about the population rate for the last 4 years or so. And you can see the severe impact of the pandemic if we look at just the level of GDP growth in the second and third quarters respectively. if we break down the last 10-year period, economists refer to this as the last decade, because over the last 10 years or so, even 11 years, the economy has actually grown at a lower rate than population growth. So GDP per capita has actually gone in the sideways direction over the last few years and has turned negative. So it's been a very, very tough time over the last 4 to 5 years or so. And the very worrying thing about this pandemic is that we are going to see significant, a permanent loss to output within the economy. And we actually the best estimates economists have is that we are actually only going to be back to 2019 levels, which was recessionary levels within our economy, at the end of 2023 only. So that's in about 3 years' time, we're only going to get back to 2019 levels, which was already in recessionary territory. So it's going to be a very, very tough 2 to 3 years, with everyone in the economy experiencing this permanent loss in output or in economic capacity. And just to drive the point home further, even National Treasury in their budget review, they say that we're only going to get back to 2019 Q4 levels in 2023 Q3. And they are normally a bit overly optimistic with these sort of things. So it's really going to be a tough few years. You can see the huge loss in output in the second quarter of 2020 as the pandemic hit and everything was sort of just closed down. And it's going to be very, very slow recovery going forward. I mean, we can talk about the global economy a bit because there is going to be this divergence between emerging markets and advanced economies. Advanced economies are, of course, a lot more organized in terms of getting the vaccine rollout. They are very much first in line. They are the ones manufacturing these vaccines, for example. And emerging markets really have to sort of wait their turn. And this is sort of some of the impact that we are going to see, this diverging trend between advanced economies and emerging markets, where some of the advanced economies are expected to get back to 2019 levels next year already, for example, whereas some emerging markets, it's going to be a lot longer. And I mean, so the main outcome of all of this, as you can see, this graph shows GDP per capita, which is basically income per person. And you can see that basically since the around 2014, GDP per capita has decreased every single year, year after year, until 2019. And you can see that in 2019, then we had this, in 2020, Q2, we had this big drop in GDP growth, and subsequently, this is going to lower people's incomes quite significantly. And it's important to mention that we're already in recessionary territory in real terms. So this is really couldn't have come at a worse time for the South African economy. And the impact of this on the building sector, for example, is quite significant because building industry is very much privately driven. And if people's incomes are expected to drop another 8% in 2020, that's obviously going to dent demand significantly for building, for residential, non-residential building. Okay, so turning to the budget, I mean, my overall, if I can give you my overall feeling of the budget, it's a little bit difficult not to be skeptical about. I mean, the government, I think, as we've all have learned, they're not so good at following through. They say the right things, but they're really not good at following through. Economists are calling it implementation paralysis that we've really seen over the last 2 to 3 years or so. The president, the finance minister, they say the right things, but it's very, very difficult for them to actually follow through on a lot of their plans. So yes, there were some positive things from the budget in terms of stabilizing what is really become an unsustainable debt situation for Treasury. And they are going to try to cut spending quite significantly. I say try because there are going to be a lot of roadblocks, a lot of hurdles in the way, but they are going to try and stabilize what is becoming an unsustainable debt path. And importantly, this is through cutting the public sector wage bill, and they're planning to cut it in real terms by about 3% on average for the medium-term expenditure framework period. Whether or not they are going to be able to do this, we can debate that. I am definitely more on the skeptical side. Unions really have a lot of power. There's an election coming up later this year, but we'll get more into that. There were no major tax increases. It really would be counterproductive at this point. Economists talk about this Laffer Curve where you increase taxes, but revenue collection actually decreases because the taxes are really at such a high rate in some degrees. So if we look at this graph, you can see that the lighter gray line is what the government is now expecting their debt to GDP ratio to be going forward if they can follow through with these spending cuts. So this is one positive thing about the budget, but I mean, how positive is it if they can actually follow through on this? It's uncertain. One very, very disappointing thing was that infrastructure spending was actually cut. So I think as a whole, I'm not really happy with this budget because infrastructure spending and other more productive spending investment activities are the category that economists really were asking for more of. Governments has increased their consumption by so much over the last 10 years or so, and investments have stayed the same or decreased quite significantly. And this is really not sustainable going forward. So as I mentioned, the public sector wage war is really going to be a big sticking point going forward. I mean, if we just look at this graph from the budget review, South Africa this is in terms of government salaries or employee compensation as a proportion of overall GDP. And you can see in our economy, the public sector wage will makes up about 15% of our total GDP, just goes to paying government employees. And this is one of the highest in the world. So this is a select group of countries. It's not everyone, but you can see, for example, the countries above us are Denmark and Norway. And I mean, we're in the range of Iceland and Sweden and Canada. And I can assure you that they get a lot more bang for their buck in terms of paying their public sector employees, in terms of efficiently run welfare programs, public healthcare, public schooling that is on what is a private sector level in South Africa. We get very, very little for, government employees are some of the most overpaid in our economy and the least productive. And the public sector wage war is making up 47% of the overall revenue the government gets in every year. That is astronomically high, and it really, public servants have gotten above inflation increases for the last 10 years or so every year, year after year after year, and it's racked up. And even the government as a sector has become such a big sector in our economy. So it's not impossible, but I think, with local elections coming up next year, the ANC needs COSATU to a large degree, that tripartite alliance. COSATU has already said that this budget is anti-poor. They're already asking for inflation plus 4% in the upcoming wage negotiations. I mean, they always go really. That's such a ridiculous request, in my opinion, where the rest of and as I mentioned, as I haven't mentioned, the ANC is very much still divided. There's big conflict over the policy direction within the ANC on a broader level. So whether the cutting the public sector wage bill has broad support within the ANC, I'm really not so sure. So whether there is the political will to really get this done, I'm a bit more skeptical. And what does that mean going forward? It means that, this fiscal cliff that economists talk about, we are on the verge of some sort of debt crisis or defaulting on our debt. And I mean, a strike is absolutely imminent. It will be quite a big strike as well. And as I mentioned, this fiscal cliff. So really, revenue collection has decreased significantly, although there's been a little bit of a windfall. We also have junk status now, so it's more expensive for government to borrow. All the extra COVID spending, I mean, all the lack thereof, really. And interest payments, as you can see from this graph, are already 20% of our total revenue, just goes to paying interest on what the government has borrowed, because interest rates have gotten so high for the government, and because we've been rolling over our debt to such an extent. Just servicing our debt has become 20% of all the revenue government collects. So really, really difficult situation from a fiscal perspective. And this has very serious implications for the construction industry going forward as well. Because if the government does default on their debt, there's obviously going to have to be big cuts throughout the fiscus, and this will obviously include infrastructure as well. Okay, so this is what I'm very, very disappointed about, because, I mean, over the last year or so, we've all heard the rhetoric. In the president's stimulus address, for example, massive infrastructure spending was on the way. Even in the budget review, on page 4, it says the 2021 budget boosts infrastructure spending. It does not boost infrastructure spending. Infrastructure has been cut by 7.2% in real terms. Last year, the figure that we got was 815 billion over the MTEF period, which is over the next 3 years. And this year has been cut to 791.2 billion. So that is a real cut of 7.2%, not to mention all the underspending that goes on. And I mean, also all this hype about shovel-ready infrastructure projects that are ready to break ground, 360 billion rand, 50 strategic infrastructure projects. Very, very, I mean, I wasn't expecting this. I mean, as I mentioned, economists have been calling for more investment, more infrastructure spending, and less consumption-based spending, to shift their spending from this consumption, i.e., just paying their day-to-day expenses, paying their employees, all of the day-to-day things that we shouldn't be borrowing money for. It should be based on tax revenue into investments. So this is very, very disappointing. And I mean, if you just look over the last 5 years, the headline figure in terms of infrastructure spending that we've been given, in 2017, 2018, there was almost R1 trillion budgeted for infrastructure. Now, 5 years later, this is down to 719. You can see it's decreased every year in real terms. There was a bit of an increase 2019, but in real terms, that was still negative. So this doesn't bode well for the silver industry, although the data has actually been a lot more positive than expected. And there are some positives in that the civil construction industry has been relatively resilient in terms of comparing to other sectors over the last year or so, but we'll get more into that. But this is more for the medium to longer term outlook, which we're a lot more negative about given these infrastructure numbers. Yeah, and as I mentioned, the government just continues to consume rather than invest. So instead of building productive capacity within the economy, they just keep spending and borrowing more and more and more. And it's completely unsustainable for our economy. And on top of all of the structural problems and the political uncertainty and investor and consumer confidence at all-time lows, there's very little incentives at the moment for the private sector to invest in the South African economy. So government it's unfortunately, they're going to have to take the reins over the next couple of years until we have a more stable political environment, or we have investor and consumer confidence that is at a level that will be more conducive to that. So it's a little bit of a worry. So I mean, just to finish off on the economy, these are just, in my opinion, some of the biggest structural constraints that we have going forward. The state of our state and entities is still in absolute disarray. Yes, there have been some steps in the right direction. Possibly it's some restructuring around Eskom, breaking it up into 3 divisions. It's been very slow. It's been very, very slow. And I mean, that is largely because of so much bureaucracy, red tape within the public sector as a whole. The government has run state and entities into the ground completely over the last 10, 15 years or so. And it's really having a dire impact on the structural capacity within our economy. So state and entities reform, big structural constraints. If we can't reform state and entities, it's really not looking good. Load shedding, of course, we also have to mention big constraints in our economy. As I mentioned, the political and just policy uncertainty in general. The pandemic may have put some of these more radical policies on the back burner, but I mean, the ANC still wants to expropriate land without compensation. We still hear about nationalizing the Reserve Bank. For what reason, I don't know. And this is creating policy uncertainty, and the private sector isn't going to invest in the economy until these issues are resolved. And that's the next point: invest in consumer confidence. And with the construction industry, there's these strategic infrastructure projects and the infrastructure fund, for example. Sure, they're steps in the right direction, but the caveat is that they are relying on the private sector to really get involved and really take the reins on these projects. Why would the private sector get involved with all of these issues that I'm mentioning? Corruption, of course, remains a pertinent issue going forward. There's a perception amongst South Africans that nothing has really been done. Very, very slow pace of dealing with corruption. And in the construction industry, there's a lot of anecdotal evidence that it's actually getting worse. If we look at some of the SAFSIC survey data, there's still a lot of corruption going on within many of the provinces. Another major structural constraint, in my opinion, is the so-called fiscal cliff. Governments are very likely to default on their debt, in my opinion. This will be somewhat catastrophic. And drastic action is needed. But really, the government is really dragging their feet, in my opinion. So it's going to be very, very difficult next few years. I hope I'm wrong. I hope I'm proved wrong. But it doesn't seem that the drastic action that's needed is going to be taken, unfortunately. Okay, so turning to the construction industry, as I mentioned, it was one of the worst performing, has been one of the worst performing sectors in the economy over the last 3 to 4 years or so. If you just look at a historical context, you can see that in the 2000s, the economy was booming. The government was spending more and more on infrastructure. It was really good times within the construction industry. The work was, there was a surplus of work within the construction industry. There was a financial crisis, of course. And then between 2012 and about 2014, there was a bit of growth, relatively okay. And you can see that since 2015 or so, very much negative environment, less and less work going on within the construction industry year after year. And now if we look at apologies, these are the gross fixed capital formation figures for construction specifically. And you can see this just shows the impact of the pandemic with the construction industry shutting down and demand really taking a huge hit. You can see that this same graph, how it's really just fallen off the cliff there in the second and the third quarter of the year, for example. Gross fixed capital formation for construction is down 34% and 23% in real terms in the second and third quarter. So this really just shows how dire the impact of this was. I mean, this is taking the overall level of the construction industry back to like 2006, 2005 levels. Really, really bad. I think I'm actually going to skip through this. Let's go to slide 21. So just a little bit of historical context is that what I was just trying to show in these couple of graphs is that the government is really the main culprit in terms of we look at the investments in construction over the last few years, is that the state and entities particularly have decreased their infrastructure spending year after year after year, basically since 2008. You can see the red line. It's really been, it was about 80 billion in 2009. You can see it's sitting around about 60 billion. I mean, that's a 25% decrease in infrastructure spending by state and entities over the last 10 years or so. And that's really, really significant. And this is because of what's been happening in the state and entities. They've been running to the ground. They have massive debt. They've been grossly mismanaged, all the corruption, etc. This has resulted in a lot less infrastructure spending. And you can see the private sector has significantly increased their investment in the construction industry over the last 10 years or so, the darker blue line. It's increased significantly from, if you look at 2006, where we were sitting around 10 billion, it's in excess of 60 billion. It's actually exceeded state and entities. So this just goes to show how important the private sector actually is within the broader construction industry, even in the civil sector these days. So much has been invested in renewable energy, but state and entities and the government as a whole, this just goes to show how they've really disinvested in infrastructure. And if we look at the forecast, which we're still yet to update when the GDP figures come out next Tuesday, you can see that we're expecting to be operating at a very much lower level for the next 3 to 4 years or so, more or less 2005, 2006 levels. Not really expecting any sort of big rebound anytime soon. Of course, the listed contractors, they continue to take a big hit. I mean, we've seen markets rally significantly over the last month or two, and you can see that the listed contractors, for example, they just have not shared in this rally. You can see the divergence between the JSE and the listed contractors is astronomical. I mean, they collectively lost about 80% of their value. Group 5 is delisted, ESOL's Business Rescue, Basil Reed's Business Rescue. It just goes on. So the rallying market's really not filtering through to construction. And if I can just show some broader macro level data for construction, tender activity within the construction industry really collapsed when the pandemic hit in April. You can see the light blue line, it almost went to zero in April, but it has stabilized somewhat, and it has been a little bit better than expected. There have been tenders coming out over the last six months or so. It has been a little bit better, but this is just to sort of contextualize the historically low level that we're at in terms of the number of tenders that are coming out every month. And the same goes for the level of these tenders being awarded. So this is actually a big positive, is that we haven't seen the collapse we saw within tender activity or within many other sectors within the broader civil industry. The data has been much better than expected. It is coming off a low base, but you can see that over the last 6 months or so, we have seen somewhat of a revival in the value of these tenders that are being awarded. So it's an indicator of activity within the construction industry. It's actually been a lot better than expected. So that's a little bit of a surprise. It's because that the private sector obviously is unable to play. I mean, the government, pardon me, is able to play a counter-cyclical role within the economy, right? They still have some money, although there's been a collapse in tax revenue, etc. There is still money there to be spent on infrastructure, whereas the private sector, they don't have this luxury. So it has been a bit better than expected. That's somewhat of a positive. And these are old forecasts. as I mentioned, our forecast report will be coming out later in the month. But I just want to highlight the disparity between building and civil. It's really a big difference because, as I mentioned, government can play this counter-cyclical role. So, I mean, we were looking in 2020 at about a 15% deterioration in civil construction investments, whereas building, I mean, we're looking at more 30%. Building is going to be really, really bad over the next 2 to 3 years, unfortunately, because it's privately driven. I mean, the demand for office space, for example, has absolutely collapsed. Shopping centers as well. If South Africans are getting poorer and poorer, obviously there's less demand, to go shopping, spending less at shopping centers. Housing as well, people are scaling down, for example. So the building industry is really going to be under a lot of pressure going forward. But there are some positives, which has been a bit of a surprise. And I mean, we kind of have to take what we get at this stage. So I mean, the first positive, as I mentioned, was the civil sector construction resilience in 2020. As I mentioned, civil tenders awarded were actually up by 12.7% in 2020 compared to 2019. Yes, as I mentioned, we are at a very low historical level, but that's very, very good considering that we're in one of the worst economic collapses in over 100 years. So that's very good. And specifically the road and water segments, the transport and water segments we've really seen a lot of activity there, big projects being awarded, big road and water projects, even some power projects, for example. So that's very good. Unfortunately, tender activity was a bit weaker, but that was largely because of April and May, with a lot of everything shut down. There was just no tender activity in those 2 months. So it was down about 5% year on year. But if we adjust for the value of those tenders, it's been a lot more positive actually for the civil construction sector. So in the second half of the year, we've actually seen growth of 15% in the estimated value of tenders that have come out. So a lot of big projects coming out to tender, as I mentioned, specifically in the roads and water segments and power to some degree. So overall, in the third quarter and fourth quarter, we saw a 7% and a 22% increase in the estimated value of tenders that are coming out. So again, a lot better than expected considering the circumstances that we are in this pandemic. I mean, just anecdotally, for example, WBHO have also commented, and some other contractors have also commented that there is a lot of tender activity. There was a lot of tender activity in the latter half of last year and the early stages of this year. WBHO do say that there's been a big jump in tender activity. That's very positive going forward, and it is a lot of big projects as well, which is great. But I mean, they do, for example, question how the government and the state and entities are actually going to pay for these projects. And of course, there are many caveats to this, all the normal problems that we have. Underspending is a huge problem. State and entities, local municipalities, they have huge skills shortages in actually implementing these construction projects. It's very, very difficult for them to do if we look at the historical figures in terms of actually spending their budgets and getting these projects awarded and, breaking ground, for example. But it's positive nonetheless. We'll take it in a pandemic, right? So another thing, not very surprising, but somewhat surprising, has been significant boom in DIY and home improvement within the renovations market, within the construction industry. The data is very, very good. If we look at Statistate's retail trade data, they have a hardware category, hardware, paint and glass. You can see that if you look at the table, if we compare hardware, the year-on-year monthly growth in the sales of hardware compared to the overall retail sales in the economy, I mean, there's been a 10.7% increase in the latter half of 2020 in the sale of hardware goods in one of the worst recessions that we've been in over 100 years. So it's really, really good. I mean, it's such an interesting structural shift that's happened within the industry. And I mean, a lot of the manufacturers, for example, have also commented that their retail side of their business has performed very well. So I mean, people have been at home a lot more. But I mean, it's not just small renovations. I was listening to the CEO of Cashworld talking on the radio yesterday, and he's saying it's timber, it's steel, it's structural materials. People are building a whole room onto their house or doing quite big renovations. I mean, this obviously isn't showing in the building plans data, for example. But so people at home a lot more. Maybe they need to build a home office, or they've been nagged, about fixing this or fixing that, and so a lot of small renovations, a lot of bigger renovations as well. And it's not exclusive to South Africa. We've seen this in a lot of Europe, parts of the US as well, So it is a very interesting shift. And I mean, this is very robust growth considering the environment. I mean, this even contributed to material shortages in the early stages in the middle of 2020. So if we just look at so this is the longer term 12-month moving average of overall retail sales versus hardware sales. You can see that from 2017 to 2019 or so, there was a big difference between construction and overall retail. Overall retail was overperforming, construction hardware sales was underperforming the overall economy as the construction industry was slowing in 2016 onwards. But you can see there's been a complete change in direction of the graph. The darker blue line completely, whereas there's been a complete collapse in overall retail sales. Hardware sales has performed extremely well and is operating at an extremely high level. Come May next year, that blue line will be at around 10%, which is which is basically the top of the graph. As we get April's collapse out of the data, it's going to be one of the best years in the last 10 years or so for hardware sales. It's very, very surprising. I mean, we've seen the listed retailers also reporting double-digit growth in the second half of 2020 as well. Whether it can continue, I think in the short run it can continue, but longer term, it is just a structural change that's happening within the economy, and obviously it's not going to go on forever, unfortunately. Then the third positive, I mean, it's a bit of a positive, a lot of caveats to this are these strategic infrastructure projects that the government keeps talking about, 360 billion rand for these 50 or 51 strategic infrastructure projects that are shovel ready. Apparently, I mean, I don't really buy that, because I mean, only 7 of them out of the 50 are in implementation phase, according to Treasury's own documents. So they're not shovel ready. I think we're gonna have to wait a lot longer for some of them. But I mean, infrastructure definitely is being prioritized, and that's definitely a good step in the right direction. As I mentioned, there are a lot of caveats to that, skill shortages within actually implementing the spending. A lot of these projects are just at the conceptual phase at the moment, unfortunately. And as I mentioned, with the political environment, with a severe lack of investor confidence, the incentives to get involved in these projects and through the infrastructure fund, for example, I'm a little bit skeptical, unfortunately. All right, so those are some of the positives. I mean, it's mostly civil construction is we're definitely going to have to revise our forecast upwards, I think, even though governments have now cut infrastructure spending. So that is somewhat positive, but it is probably still going to be negative, unfortunately. So, I mean, let's just look at just to drive the point home further in terms of the civil construction sector specifically. If you look at, for example, the SAFSEC State of the Civil Engineering Industry Survey, this is opinions around tender activity. You can see that actually in the fourth quarter of 2020, there was still 45.6% of contractors in the survey that said tender activity was satisfactory. So that's, again, relatively good in one of the worst economic collapses that we've been around for. And in terms of tenders being awarded, also much better than expected. If we look at the opinions, 45% of contractors say that award activity was actually good, which is, I mean, most of them say it was low, 53%. Some of them say it was non-existent, but if we look at the historical data, it's very, very seldom that contractors have said that award activity has been good over the last 4 or 5 years or so. So just to drive the point home further, that there has been some increased activity within the civil construction industry, which could be gaining some momentum potentially. Contrary to this, the civil construction, if you look at the BRFMB's building and civil confidence indices, civil confidence is actually lower than building confidence, which is a bit surprising. So it kind of goes against what I've been saying, but we'll have to give it a few quarters to see. This is just grade 9 contractors, so the bigger guys. But you can see that, I mean, civil and building confidence is almost at all-time lows. There was a bit of spike in building confidence in the second quarter, I think it was the first quarter of this year, but still very, very low levels. And similarly, the SAFSEC confidence index is basically at rock bottom. I mean, if you look at the historical trends here. Again, infrastructure has been cut, but if we look at the categories of spending, and a caveat to this is coming off a very low base, because in 2018 and 2019, spending was very low and there was a lot of underspending. But if we do look at the average spending going forward in transport and water, for example, it's actually very good. whereas the cuts have been mostly to social infrastructure, so your affordable housing, your hospitals and schools, that sort of thing, transport and logistics, and energy and water. We're still looking at above inflationary growth over the next 3 years or so. So that's a bit more positive. But I'm going to have to give these figures a bit more review. You have to look at them a little bit deeper based on what happened in 2019, where there's really big underspending. So a bit of caveat to that. But as I mentioned, so it's a little bit difficult to weigh the outlook. As you can see, some of the data contradicts each other a little bit. The sector has been a lot more resilient, definitely. Activity has been better than expected. But on the other hand, governments now cut infrastructure spending overall. So it's a little bit difficult to weigh the outlook. So we have to see what the model gives us when we run them in a couple of weeks after we get the new data in. But I mean, we're thinking we're going to have to revise the forecast upwards a little bit at least. So it's been a little bit better than expected. But as I mentioned, all the problems of underspending, skill shortages, implementation, all of these problems are still going to persist over the next few years or so. All right, so building, a lot more negative. There's very, very little to be positive about in the building industry. There's some positivity in the second-hand residential property market. Unfortunately, not a lot of new mandates coming out. Affordable housing is maybe the only category where we could see some sort of stable construction activity in terms of government, again, playing the counter-cyclical role. There's a big backlog there as well. But in terms of private building, it's really, the pandemic was huge demand shock. As I mentioned, much less demand for office space, shopping centers, industrial buildings, luxury housing, for example, has taken a big hit. And as I mentioned, there's going to be a big difference between civil and building going forward. And this very much stems from South Africans getting poorer and poorer over the last few years and now taking a big hit to their incomes again this year. So if we look at Stats SA's data on building plans completed, so now this is more giving us an idea of activity levels within the private building industry. You can see that in April we had the worst month ever on record. 90-something% decrease in plans completed. But what I wanted to show with this graph is you can see the dark blue line is that we are at our worst level ever in terms of private building, how much we have built over the last year compared to the previous year. That dark blue line is sitting at 44.8% contraction in square meters of plans completed in 2020 as a whole compared to 2019. So there's huge contraction in private sector building activity. It was an instant deep recession when the pandemic hit, but it's important to mention again that we were already in a recession. This graph was already in negative territory before the pandemic hit, and it was expected to be negative as well. And so, of course, this doesn't include a lot of the renovations where plans aren't recorded. So that is obviously one caveat to this, but that is the renovations market is relatively small compared to the overall size of the private building industry. So as I already said, there was a bit of an unexpected rebound in the property market in 2020. In my opinion, it's more the second-hand property market. There's not much evidence that it's actually a lot of new buildings. So, I mean, you can see from FNB's house price index, you can see that it increased quite robustly from in the latter stages of 2020, to almost 4% again. Obviously, the interest rates are at a record low, so it is incentivizing a lot. It is more feasible in different brackets of property to actually buy a house rather than to rent. It's actually cheaper to buy a house if you can afford the deposits and, if necessary, and the legal fees, for example. So that has definitely grown the second-hand property market to a long degree. And FNB said that they saw the highest volume of mortgage approvals in over a decade in the latter stage of 2020. So that's something positive to a large degree, but I'm not sure it's going to really filter through to the construction industry. And also, I don't really think it's sustainable going forward. I mean, we're not really expecting interest rates to get much lower as well. And it's just interesting to look at the categories of housing. So this is now house price growth. This is average purchase prices in different housing categories. And you can see it's very much on the lower end of the market, the 190,000, 420,000 categories, where in those categories it is cheaper to to pay a bond off rather than to rent. So that's why we're seeing such an increase and such a demand in those categories. But you can see the luxury or higher end of the market has really taken a big knock. Average purchase prices were down 7.2% in houses that were bigger than 3.9 million. So it's a really significant decline in such a small space of time. Okay, so I mean residential, so looking ahead, we like to use status says data on building plans approved. It is a necessary condition to build if you're going to build a house. So it gives us a very nice leading indicator on building private sector residential building to come. And as expected, it's not positive, right? We're expecting so in 2020 overall, there was a 30.9% decrease in the number of square meters that were approved through municipalities. And you can see they declined throughout every category. Low-cost housing is down 25%, luxury is down 21%. The biggest decline was in the flattened townhouses space, which is coming off quite a high base because the flattened townhouses or sectional title segment has been one of the best performing segments of the last couple of years. And so that's really taken a big knock, more than 40%. Even renovations approvals were down 30%. I mean, this just goes to show that the vast majority of renovations plans are not submitted, because if you look at the hardware sales data and just the value of hardware sales, it far exceeds renovations in this instance. So very dire outlook for the private residential housing markets, unfortunately. So as I mentioned, the only possible positive, I mean, this is really clutching, looking for something, could be the affordable housing market. In terms of these strategic infrastructure projects that are shovel ready, a lot of them are big housing projects. In KZN, a lot of them in Gauteng, for example, Mpumalanga. If a few of these can get rolling, that will go a long way at boosting the overall building outlook. But again, all the issues, implementation issues come to the fore. Okay, then in terms of the non-residential markets, also it's really not good. This is just, anecdotally, we can look at a handful of the property funds. You can see what a big correction there's been over the last year or so in the share prices and the valuations of your bigger non-residential property funds, your Growth Point, Redefines, Resilience, etc. Huge slump in share prices. And they have been one of the worst. The building industry, in my opinion, is going to be one of the worst performing sectors in the economy over the next 2 to 3 years or so, unfortunately. And this shows in the financial markets as well. Property funds have been some of the worst performing throughout the JSE. So as I mentioned, demand has just significantly been dented for the types of buildings that these developers fund, right? So your housing, not your housing, your office space and your retail and industrial, very, very sizable dents to demand there. So if we look at it again, looking forward, this is now status says data on building plans approved. Overall, 35.8% decrease in square meters for non-residential buildings were approved in 2020 compared to 2019. And you can see the worst performing category was office space, down almost 50% approvals in office space. Again, office space seems to be the worst performing category. This is now the FNB's latest commercial property broker survey. And you can see that the dark blue line on the far right, 72% of the property brokers that were surveyed said that within the office space sector, that supply far exceeds demand. And so there's a lot of empty offices at the moment. Vacancies are also at all-time, or vacancies within the office segment are at their highest point since 2003, I think. And you can see that it's all bad. So in terms of the retail sector, the majority, also 44%, say that the supply far exceeds demand in terms of retail buildings. Industrial's a little bit better, not much better. 45% still saying that supply exceeds demand somewhat. So very, very negative outlook for the private sector non-residential industry. We can talk about office space, we can talk about retail. We've already seen, just anecdotally, for example, a lot of the property funds have already reported that some of their biggest tenants are wanting to downsize their office space. So people are realizing it's not as necessary to have these big offices. I think going forward, COVID has been a nice experiment for businesses to see what it's like if all of their staff work from home from a day or two, or even the whole week, as we had to in the really bad stages of lockdown in April, May. And I think a lot of businesses have it's worked for them. Not all, sure, but there's definitely, this is again, COVID has been a sort of structural, it's caused a structural shift within the demand for office space. With going forward, a lot more people are going to be working home 2 or 3 days a week. And this is going to reduce demand for office space, as you see that a lot of the big property funds tenants have already said that they want to downsize their office space already. So a bit of a structural shift to a much lower level going forward, unfortunately. Yeah, and these are just the vacancy rates. So you can see that 13.3% vacancy rate currently within office space. And this is the highest that it has been since 2003 or so. Industrial vacancy is not nearly as bad. It's going to be one of the better performing segments, but it's still going to be quite bad if we compare to the overall economy. In terms of vacancy rates, I mean, in terms of the growth within the industrial and warehousing sort of space. And then finally, just to touch on shopping centers. Again, trading density is down really significantly in overall shopping centers throughout the country. Foot counts down 19% as of the third quarter of last year. It's a really significant dent to demand again for people just going to shopping centers, have a lot less disposable income, for example. And we are seeing that these super regional shopping centers have been the worst affected. So unfortunately, not a good outlook there either. Right, so that's mostly what I wanted to say. Thank you very much for listening. Best of luck going forward, and yeah, look forward to a lot of your questions. Thank you.
Great, thanks, David, for another very insightful presentation. A lot of very sort of depressing stuff there to consume, but let's take your questions and let's engage David on the content of his presentation. So we're just waiting to get some of the questions up on the screen. But whilst we wait, let me first also thank you all for dialing in. I think we've got quite a large number of people who have dialed in to listen to this presentation today. The first question we have up on the screen is from Nkosipi Nyandu. He says, kindly email me the documents. Well, just for everybody else to know that we will make the content of the presentation available on the AfriSam website. We will create a link for every one of you to be able to access the content of the presentation. So David, what we've seen based on what you've shared with us is South Africans are becoming poorer.
Absolutely.
People have taken pay cuts. We've seen a lot of people being retrenched. So I think, you know, if we listen to what some of the retailers have been telling us, the likes of Cashbuild, Build It, and some of the big hardware retailers, is they have seen a spike in demand for hardware retail products. And that's mainly because, as you've indicated in your presentation, people are working from home, they're having to do renovations. A lot of it's not captured in the stats in terms of renovation stats. But, you know, as the level of unemployment increases and, you know, people are obviously spending a lot of their retrenchment packages on renovations, but at some stage it's going to stop.
Absolutely.
What is your view on that, and what do you think?
Yeah, I mean, unfortunately, I can't. So for me, it's very much a structural break. That's what we sort of economists call it. It's just a structural shift in an underlying thing in the economy, and a structural shift, it happens once, right? So something will change, and it's kind of that's where it is now going. So we see a structural shift, and it's like at that level now. So we're not expecting it to really increase. And if you look at the outlook for the economy over the next 2 to 3 years or so, there's very little to say that this is going to increase. So we think it's just a structural break that's happened, and now will unfortunately start to peter off eventually. When, it's very difficult to say, depending on the demand for these sort of things. But I think in the short term, I think it will continue for at least the next few months. But yeah, longer term, unfortunately, we're not expecting it to continue.
Okay. So Jacques Stradum has a question. Let me just scroll the screen up a little bit so we can see Jacques' question. So Jacques says, what is your assessment of regional demand? In other words, residential growth in the Western Cape versus GDP. And secondly, how long do you think interest rates will support residential demand over the next 2 to 3 years?
I haven't looked at the stats recently, but the Western Cape, I think, is actually one of the worst performing segments within the economy.
Yeah.
Gauteng is also bad. There's really very few positives. If you look at the stats, very much throughout the country, is that with the residential industry and the building industry in general, all provinces have been affected from the private sector. They haven't been immune to the effects of the economy, and I would speculate that the Western Cape would be somewhat worse affected than Gauteng because of the more luxury housing that is a bigger component there, for example. And in terms of interest rates, how long do you think interest rates will support residential demand over the next 2 to 3 years? I think interest rates are going to be low for quite a long time, to be completely honest. Interest rates are only going to start increasing when the economy starts to get going, which unfortunately I don't think is going to be anytime soon. I even think there's more scope to lower them further. I don't see any. Inflation is very low. It's only expected to average like 4% or so over the next 3 years. I see no reason why the Reserve Bank can't lower interest rates even further. It might be at such a low level that even lower, it's not really going to have much more of an effect, possibly. But I would like the Reserve Bank to lower interest rates a bit more.
So maybe just to add to the question about the Western Cape, and so cement is normally a good indicator of what's happening in the industry. So we were invited to participate in a Semtech international conference a few weeks ago, and on average, per capita cement consumption on average around the world is around 600 kilograms per person. South Africa is averaging under 200 kilograms per person. So that is already a significant difference in terms of the rest of the world. And if you look at local per capita consumption of cement, Gauteng accounts for the highest. Gauteng is probably at about just over 400 kilograms per person. The Western Cape is in the region of about 180 kilograms per person.
So below the average.
Below the average, significantly below. So the three big provinces in South Africa, Gauteng obviously consumed more than 40% of all cement in the country. The next biggest is KwaZulu-Natal, KZN, and then the Western Cape is third. So that's sort of how it pans out. Okay, so Zolani says, what is your recommendation for firms in the construction industry to hold on to their staff? I.e., minimize the need for retrenchment in these challenging times? Yeah, it is a good question. So let's hear your view on that. I think.
Sure. I mean, it's a very. So can you keep the? I'm just reading it again, if you don't mind. So I mean, it's very much company to company. I don't know how. It's important that your company is the right size for the current environment. That's all I can really say. I don't know the details of specific manufacturers or specific contractors, for example. But in terms of, if you can hang on to your staff, you should. If you see that you got some work coming up, if you want to rather give your staff pay cuts than to retrench them, in a way, it's a personal decision in terms of your own performance within your own company. So it's kind of difficult for me to say specifically, but I think it's just very important that I saw this in, for example, the contractors in 2016, 2017, they were hanging on to staff when they maybe shouldn't have been doing so. For example, they were very, very slow to restructure their businesses and scale down according to the current environment. They thought that they were just waiting for the infrastructure spending. They thought it was coming. It just didn't come. It didn't come. And you see what happened is that it hit them quite hard. So you have to really be prudent, and you have to really just make sure that your business is the right size for the current environment. That's, I think, the good general advice that I can give.
Yeah, and I mean, as a company that provides construction materials, AfriSam has been faced with a similar challenge. We've had to go through a restructure last year where our construction materials business, which produces aggregates and ready-mix for the construction sector, we've had to reduce the number of quarries, a number of ready-mix plants. So it is a very relevant question in the current environment, is to make sure that you right-size your business to fit current demand.
Absolutely.
It is also unfortunate that it does add to the levels of unemployment in our country, which is something we don't need right now. So anything we can do to preserve jobs is quite an important thing. Yeah. So I see we have another question from Jacques. No, we've dealt with that question. Can we just scroll down? That's just a comment. Oh, let's see. Ziad, sounds like our colleague Ziad from AfriSam wants to know, do you have any high level of comments with regards to our neighboring countries like Botswana, Eswatini, Lesotho? Because normally we don't have statistics on those countries.
It's difficult.
It's normally quite difficult to get statistics. But you go first, and then maybe I'll give some comments as well based on the cement demand in those countries.
You probably know more than me, to be honest, in terms of selling cement there. But I have no high-level comments, maybe low-level comments. But I mean, Africa is always going to be an opportunity, absolutely. I mean, there's such a backlog of infrastructure delivery within Africa in general. And I'm sure Botswana, and I'm not sure about Lesotho, but Botswana and Eswatini, I'm sure would fall into that category. So that's all I can really say on the high-level thing. I don't have any broader statistics to share really on those countries.
Yeah, so what we do know about countries like Eswatini and Lesotho is that they are largely dependent on international funding, foreign investments, etc. And with a lot of countries experiencing tough economic times, everyone focusing on vaccines and vaccinating their countries, we have seen a decline in spend in those countries. Botswana, on the other hand, is one of the more positive examples of countries that are doing well on the African continent. We know that Botswana has got large diamond, in terms of diamond production and selling lots of diamonds. And, the Botswana economy has been doing quite well. In fact, last year, we've seen our highest cement sales in Botswana. And this year, it looks like it's continuing. So Botswana still seems to be doing quite well. We've traveled to Botswana a couple of weeks ago. Some colleagues of mine and I traveled into Botswana, and we're still seeing a lot of infrastructure spend happening, a lot of upgrades. In Gaborone, the CBD of Botswana, we're seeing a huge upgrade in the CBD. So Botswana still seems to be doing quite well. Eswatini and Lesotho, though, not quite the same, unfortunately, yeah.
Yeah, Botswana also has a small population.
Yeah.
For the size of the economy, it's quite good.
About 2 million people, yeah. So another colleague of ours, Mr. Kwena Sisele, says, thanks for the presentation, David. It clearly projects a very pessimistic outlook for the construction sector. How does this outlook compare to other emerging markets and other countries that were impacted severely by COVID-19? And what are the key learnings for us as South Africans?
Yeah, so as I mentioned, there's going to be, because of vaccine rollout, advanced economies are very much first in line. There is going to be, if you look at IMF's latest World Economic Outlook, for example, there is going to be relatively significant divergence between advanced economies and emerging markets in general. So I would say, how's it compared to other emerging markets? I think would be slightly below average, but it will be a similar trend line. But we are definitely if you look at our economy even before the pandemic hit, we are definitely underperforming other emerging markets quite significantly, especially if you exclude China from that as an emerging market, of course. So I think we are definitely underperforming other emerging markets because the state of the fiscus is better in other emerging markets. Not all of them. Some of them it's actually worse, and some of them it's a bit on par. But I'll say on average, the state of the fiscus is on average poorer in South Africa than the average emerging market. And we are going to run into debt issues going forward, in my opinion. So a little bit difficult. The key learnings, I think, are just, right-sizing the debt from a government's perspective. That's going to be a really big sticking point going forward.
Yeah, and with us having a cement operation in East Africa, in Tanzania, what we can share based on the information we have is that East Africa does seem to be doing quite well. We're seeing economic growth rates of somewhere between 5 and 10% per annum. And East and West Africa do seem to be doing a lot better than what we are doing. So I think you're quite right. So I think it does deal with Khomotso's question around comments around Africa and construction trends. So we are seeing better spend in terms of infrastructure spend.
Yeah, the debt situation is not quite as bad.
Yeah, and if we use some cement as an index, we certainly can say that East Africa, West Africa do seem to be doing better than what we are doing. Steve Maluleke wants to know, how is the future for the cement industry? I could deal with that question, but let's get an outside view from someone like yourself.
No, I mean, I think it would be very much linked to my whole presentation today.
Yeah.
Well, must I summarize it again? No, I think you could.
Yeah, so maybe, Steve, just to give you a perspective. So I think you've seen the demand for both construction as well as building and residential. But what we do know about the cement industry in South Africa is we have massive surplus capacity. We have somewhere, depending on how you look at capacity, because it also depends on the extent to which cement companies are able to extend and use products like fly ash or blast furnace slag. But on average, I think we think about 20 million tons is the capacity we have. And at the moment, demand is sitting at around 12, 13 million tons per annum. We do know that a lot of effort has been put in to try and get some support through an ITEC application to reduce or prevent cheap imports being dumped on our shores, because that contributes, I mean, if you look at the imports coming into the country, contributes about 1 million tons per annum when things are at the peak. So if we can get some sort of support from government in terms of limiting the imports coming into the country, that will certainly help to preserve jobs in the industry. But I think having surplus capacity of anywhere between 25 to 30% is still going to be a challenge that we're going to have to face for the next 5 years at least. Yeah. Then Tabatso Mokwena, another colleague of ours from the trade unions. Thanks for dialing in, Tabatso. Tabatso wants to know, he says, the skill shortage, do we have any stats on which skills are the scarce and critical skills in the sector? I think
more from public, it's more from the public sector side.
Yeah.
So the clients in this instance.
Yeah, and based on last week's presentation by Dr. Azar Jamin, is certainly if we look at the stats around, let's take the basic education skills. If we look at the number of students who are moving away from pure mathematics to what is the other version? Maths literacy. We are starting to see a lot less people getting into engineering, into the sciences. I mean, we're seeing it in our industry as well, you know. And in fact, the building and civil sector have also started to see a decline in a lot of, skilled technicians, artisans. So it is posing a challenge, Tabatso, and I think we will start to see the impact of this in the years to come, especially in our industry. Dumetsa wants to know, how could we address the private sector corruption, as both private sector and government go hand in hand? And I think a topical issue at the moment is something we spoke about earlier, is the whole Steinhoff issue. You know, there's a big debate around, you know, Steinhoff funding the Hawks to investigate. So let's hear your view, because certainly it is true. It takes two to tango.
Oh, absolutely. Private sector likes to claim that they're
correct.
Hands up, and they're absolutely involved. I mean, it's a difficult question, because I mean, as you said, it really goes down to prosecuting capacity, or I don't know what you want to call it, but I mean, that unfortunately is a public sector phenomenon, right? So to investigate corruption, investigate these high level sort of things, we have to have a functional national prosecuting authority, for example, the Hawks, etc., etc. So it's it's trying to make those organizations more efficient and building back. I mean, NPA, massive loss in capacity over the Zuma years. Yeah. So a positive is that we are slowly, very slowly, building back capacity with at the NPA, for example. So it's just things like that that are going to go a long way. And I don't know, it's a very difficult question, because it's so widespread, corruption in the construction industry, even every province, this municipality, that municipality. It's just, you know, politicians are not being held accountable. I think that's the main point. And until politicians are held accountable, it's not going to stop. But are they going to be held accountable? I don't think they are. There's no evidence to really say that they are going to be. So very, very difficult situation. But as I mentioned, is restoring capacity at some of the prosecuting authorities, the Hawks, etc. I think that's a start.
Yeah, and I think, what is certainly become quite clear as a result of the whole Steinhoff issue that's quite topical at the moment is the comment that the Hawks did not have enough budget to investigate the whole Steinhoff thing. I think that certainly, we sort of assume that, government departments, the prosecuting authorities, they have got the capacity and the means to do all of these things. But what has become quite clear is that they certainly don't have the capacity to do all the investigations that are needed. And hopefully this will, with Treasury and the focus on the budget, they will realize that, we do have a chicken and egg situation. If you've got a country that's deemed to be highly corrupt, that you don't have the capacity to investigate, you also don't send the right signal to investors who want to invest. So I think it's something that Treasury is going to have to look at and consider as an important priority. And
also, what sort of signal does it send to other big listed companies? They can the signal is that they can do whatever they want, basically, is that there are actually no consequences. For their, whatever financial wrongdoings may be. So really not a good situation.
Okay. So Anthony, I hope I pronounced your surname correctly. Anthony Butcher wants to know that for students attending here, what is your advice for prospective construction science graduates of 2023? So we probably have a lot of students who are studying either architecture, civil engineering or building science. What sort of confidence can we give them that it's still a good skill to have? It's still something that we need. Obviously, and hopefully things are not going to stay like this forever because we are still a growing population. People still need houses, schools, hospitals. So we're still going to need those skills. But I think in the short term, we're probably going to have a surplus of those skills. But what is your view on that?
Well, I mean, as you mentioned, I think it's difficult to say because there aren't concrete statistics on this. But anecdotally, there does seem to be a shortage of engineers, for example, and these construction science related fields. There does seem to be a shortage of those graduates. So I wouldn't worry too much. But I mean, I think some advice maybe in South Africa is that find a sort of niche sector, maybe some sort of green building or something. Find sort of specialize in something that you think is maybe going to be the next big thing or the next trend within construction. I'm not exactly sure what they might be, but green building related or something, staying more up to date on something more modern technology that you want to bring into the industry or something like that. I'd find something niche that has a sort of good outlook for the future, I guess. I don't think I'm explaining it very well, but
So Wiseman, you don't need to apologize for your question. I think it's very relevant. So Wiseman wants to know, what is your view on the future of collective bargaining in view of the public sector dispute where governments seem to negate its responsibility to honor its side of the wage agreement? And I think we spoke about that early on. Government went to the labor court. They were successful in terms of reneging on an agreement that was reached. And so obviously this is a concern for the trade unions, and they want to know, so what is the impact of this and what does it mean?
Yeah, I don't think it's going to have a big impact. The unions, in my opinion, still have a disproportional amount of power in our economy. And sorry if the people with the unions listening, but who don't like to hear it, is that the unions have too much power in our economy. Our labor market is one of the most rigid in the world. It's extremely challenging labor market environment. So I'm very happy that the courts ruled in favor of government, for example, and I'm hoping that we can have more of this, but I'm actually not confident that there will be, for example. So I think the unions, they're probably fine for the short to medium run. Not a popular answer, but
so for those of you who don't know, so I also wear another hat at AfriSam, which is I act as the HR executive. So for my union colleagues who are listening, I haven't paid Dave to make any of these comments. They are his views as an economist. Grace wants to know, how long do you believe the current slump in the industry will last? is there anything that can be done, perhaps on a government level, that will save the situation?
Yes, they can spend money on infrastructure, very easy, and do what economists have been asking them to do for the last 5 years or so, is to reduce their consumption spending, so spending on the wage bill, for example, and other short-term items, and invest in the South African economy, and reform the state and entities so they have capacity to invest in the construction industry, for example. All of those structural bottlenecks that I mentioned, I could pick either one of them and talk about that in terms of what the government can do. There's a lot they can do. Whether practically they can do it is, that remains to be the question. But how long the slump will last, difficult to say. At least the next 3 years, in my opinion, at an absolute minimum. Even though we are seeing a little bit better data from the civil side of things. Not so sure how long that will last, but it's at least something positive.
Yeah. So there's another loyal customer of ours. Very, very nice to see that you've dialed in, Ian Jenkins. So Ian wants to know, with cement being the major ingredient in manufacturing of construction materials, what is the chance of cement manufacturing holding their selling prices for the next 10 months in order to assist in boosting demand? I obviously have a view on that. Not a very popular question for somebody who's in sales and marketing, but let's hear your view, and then I'll give you my sense on it.
No, I think you're more qualified for that one. So what is he asking exactly? So he's saying
really around
what is
price
around
and demand and
so keeping it low on purpose.
Yeah.
No, that's just, I don't know. It depends on your marketing strategy.
So Ian, let me share with you something which a colleague of mine shared many years ago, and he gave a very good example. He said, let's take the tire industry. We all, well, not all, but let's assume that many of us have motor vehicles. So if you are driving past a tire company that sells tires like Goodyear or one of these tire companies, and you see that the tires are on special, are you going to stop to buy tires for your car just because tires are on special? Or are you going to look at the thread and say, my tires are now due for replacement, and because of that, I'm going to buy tires? I think the same principle applies to the cement industry. People don't buy cement because it's on special or because the price is low. They buy cement because they are running a project, they are building something, they are renovating something. So the sort of price elasticity for cement is very different to other fast-moving consumer goods where people need the stuff every day.
Term
cement people buy because they need it. If they don't need it, they're not going to buy it. So dropping the price doesn't increase overall demand. All that it does is it shifts people's buying patterns. So if people were going to buy from supplier X, and supplier Y drops the price, they might move away and buy from another supplier. But if you look at overall industry demand, it doesn't grow because the cement prices drop.
Absolutely, no.
Have we got any more questions? So Ian, I think it was a good question to deal with as a sales and marketing person to end this discussion for the day. I see we've got one more question. Let's maybe deal with that one quickly. It says, with a slowdown in the construction, and are we still losing skills? So are we seeing skills immigration? Are we seeing people leaving the country because of the slowdown in the construction? I think the industry overall. If I remember correctly, last week, Dr. Azar spoke about 30,000 people leaving the country every year. I think what has probably slowed down the immigration of people has been the pandemic and the inability to travel.
Exactly. Practical problem.
More of a practical problem. But I think, with many countries opening up, with vaccination happening,
advanced economies,
incentives
are even higher.
Correct. We might start to see a surge in people probably leaving because of the lack of opportunities in the South African
absolutely
economy.
And as the economy stagnates and does even worse and worse year after year, that will just continue every year. It will get higher and higher and higher, in my opinion, unfortunately.
Great. On that note, not a lot of positive stuff to share, unfortunately.
I had 3 positives.
There were 3 positives, you're right. But, the forecast looking forward doesn't look like we're going to see a significant uptick in demand for our industry specifically. What we do, however, hope to see is government implementing the vaccination plan like most other countries around the world. I think that's a key priority for many countries, and we certainly hope. I think Minister Zweli Mkhize is likely to share some more information on that shortly. But I think getting our population healthy, getting everyone back out of the lockdown situation, getting the economy back up and running is clearly a priority. For all of us, getting people traveling again.
Absolutely.
I know, having been in quarantine for 2 weeks is extremely frustrating. But if we can get people out, if we can get the economy back up and running, that would be fantastic. And in fact, if we can have this type of conference with you all sitting there, raising your hands, and we can deal with it in person, would be fantastic to get back to that level again in future. Let's hope and pray that next year, this time, when we have our next round of budget breakfast, when we have David with us again next year dealing with the construction industry, let's hope we will have had enough people vaccinated, we will have herd immunity, and we will be in a position to see you in person. And when we end the conference, we will have a cup of coffee with you outside. But on that note, thank you all for dialing in. Really appreciate it. And for the many customers who have dialed in, thanks for your loyal support. And David, once again, excellent presentation.
Thank you very much.
Certainly very useful for us as a cement industry to know what the forecast looks like, where things are heading, so that we can also plan our manufacturing facilities, etc. So thank you again.
No, pleasure. Thanks for having me.
Thank you very much.
Great to be here.